Hello, this is William Burnson of KingWilliam.com. That's KINGWM.com, where you can join our mission to ensure good common sense local government. Thanks and God bless. And I just wanted to note that I spend an awful lot of my free time compiling my reports and my videos, and I don't really have the ability to spend hours and hours editing and refining these videos. So please accept my apologies for the rough nature of these videos. Thank you. And this is your actual increase. Let's go ahead and highlight that. That's the actual tax rate increase every year. If they're telling you this is their tax rate increase, they're telling you the tax rates went down the last 2 years by this amount. When 3.5 to nearly $5 billion, that's a giant increase. This is your actual tax rate increase. This is how you confuse the public by saying you're lowering the tax rate by arbitrarily increasing their property values. And welcome to another video explaining how local government works. So recently, that would be September 14th of 2023, in Fayette County, Texas, our Commissioners Court approved our 2024 budget. So that in 2023, you approve the 2024 budget. And of course, when discussing the budget, you have to also discuss and adopt a tax rate for the new year. And I have found that there's a lot of confusion and misunderstanding surrounding how tax rates work. And often you see it when someone who doesn't fully understand a tax rate, they will allege that the tax rate has been lowered when in actuality it has not. And so I'm going to take this opportunity to explain how effective tax rates work so that we can properly understand when our rates are going up and when they're going down. And so I want to draw your attention to two rates on this sheet. This is the letter from August of the 1st for the 2023 tax rates, which will apply to the 2024 budget. And so the first thing is the no new revenue tax rate of 0.39353. That no new revenue rate is with this year's property valuations is equivalent to last year's adopted rate at last year's property valuations. So I'm going to get into this in more detail later, but last year our rate was 0.43 or 0.44 or something or other. But our appraisals went up significantly last year. And so in order to generate the same amount of revenue, they calculate the no new revenue tax rate, and it's like 4 points lower than last year's tax rate. And those numbers are said to be equivalent. And the second number I want to draw your attention to is the 2023 total voter approval tax rate. So some years back, the law was changed such that county governments could only increase property taxes by 3.5% per year. And so there's some funny math that goes into that, and there's lots of corrections. So it's not always exactly 3.5%, and I can't explain those formulas. But essentially what they're saying is the voters approve an automatic 3.5% tax rate increase every year. And if the government needs to generate more revenue or wants to increase the tax rate higher than that amount, then they have to hold an election for the voters to approve it. At that election, if the increase is not approved, then the government is limited to the no new revenue rate, and they don't even get the voter adjusted tax rate. So it's very uncommon to go to an election, and it's very common just to do a max tax increase and increase as much as you can. And that's what this represents, as you'll see. And that's what happened this year, as you'll see here in a minute. So I'm going to state a fact, and then I'm going to prove it. Tax rates increased this year in 2023 in Fayette County. And I'm going to prove that to you. So here was our agenda for Thursday, and I'm going to draw your attention to item number 11. Consider and to take appropriate action on a motion that the property tax rate be increased by, see the 41196 rate? That's from here. They did a max increase, it's the most they could get, for the tax year 2023, which is a 4.7% increase in the tax rate. What? They keep telling me the tax rate's going down. No. It clearly is going up, as it says right here, and it went up by 4.7%. And so I'm going to show you this language on the current budget. This is the 2023 Fayette County budget. And as you can see right here, so this tax rate budgeted, the 2023 tax rate, that's the tax rate that is generated in 2023 for the 2024 budget year. See 0.41196. And that's the combination of the general fund rate, the road and bridge rate, and then and these two together are maintenance and operations, if you've ever heard that rate. And then there's always the interest and sinking fund, which is the debt. So this is the Fayette County debt. You can see that tax rate is very low because our county does not have a debt. When you add all those two together, you get our tax rate of 0.41196. The other number that I'm looking at here is this certified roll for July 24th of 2023. So this is the total valuation of all the property in Fayette County that we're going to be using for our budget, and that's $4.9 billion. And you'll see that $4.9 billion right here in my spreadsheet. So this is the 2024 budget year that we're talking about. Again, this document was approved in 2023. It is the 2024 budget. And so I have the budget year here, 4.9 million in a certified roll, and you can see my tax rate there. Okay. In addition, I'm going to scroll up a couple of pages, and it's the same in all of these documents, except for this one. This is the new one, and I don't have the official version yet. So let me come over here and get, we know the 39353 is right here, the no new revenue tax rate. And then here's our budgeted appropriations for this year, just so that you know. And let me explain these the percent increase columns here while we're at it. So 17.1%, that means this certified tax roll is 17.1% larger than that one. It increased, our appraisal values increased by 17.1%. The tax rate, this is the overall adopted tax rate, and you can see it decreased by 6.8% this year. And I want to point out that the appraisals increased by 17%, and the tax rate only came down by under 7%. Clearly, you can see the no new revenue tax rate, and this 4.7% is the increase from 0.39 to 0.41. That's a 4.7% increase from the no new revenue rate to our currently adopted tax rate. Here's the appropriations. This is the difference between the appropriations from the year before. Now this number I don't think is useful, but it's the percentage of the appropriations divided by the tax rolls. So you can see every year, basically, it's trending. It's not every year, but it's trending downward. So our government appropriations is not growing as fast as the certified tax roll, and that's positive. The proposed budget. I want to draw your attention to this paragraph here, where it says the revenue from property taxes will increase by 1.3 million or 7%. Notice that only 600,000 is from the new property added to the tax roll this year, which means roughly $700,000 was from existing property. So this may not be considered a tax increase on me if I am not part of the new property that was added to the tax roll. But since this is existing property, I guess that minus this, so 700,000, then that does represent a tax increase for me of 7%. And it's plain and clear right here. And again, the property tax rate will be increased to the new rate. That's an increase over the old rate, which is effectively a 4.7% increase in the tax rate. And you can clearly see that 4.7 here as the difference between these two tax rates. So I'm simply reading the language from the agenda. Hearing on tax increase. Ratifying property tax increase. And in case you're still not convinced, let's have a look at this document. So this was the notice of public hearing on tax increase for this year. And this was presented to us on August 24th. And you can see the tax rate. There's our current tax rate that they just proposed. They compare it to the no new revenue rate and the voter approved rate. So clearly they've adopted the voter approved rate, which is the maximum increase. The no new revenue rate for 2023, that will raise the same amount of property tax revenue For 22 and 23, the voter approval rate is the highest tax rate that Fayette County may adopt without an election. This means that Fayette County is proposing to increase the property taxes for the 2023 tax year. They're going to hold a public hearing. The proposed rate is not greater than the approved rate, and so we're not required to hold an election. So what they always say is, well, the tax rates are coming down. You can see how the adopted rate is lower than last year's adopted rate. But what they're doing is they're comparing it to last year's rate, which is based on last year's valuations, and that's not an apples to apples comparison. In order to do an apples to apples comparison, you have to compare the new adopted rate to the no new revenue rate. That makes an apples to apples comparison. This rate at this year's evaluations is equivalent to this rate at this year's evaluations. Equivalent means equal. This rate is not at this valuation is not equivalent to this rate at this valuation. You really can't compare the two. Sure, the overall tax rate came down, but who cares if the tax rate came down 7% when the valuations went up by 17%? That's a tax increase, no matter how you look at it. Okay, so when you comparing the language to the budget item, the agenda item right here that says 4.7%, that came clearly from this to this. So what they're saying is, after adjusting for the new valuations and eliminating the new property and all the other corrections they do, this rate is equivalent to that rate from the year before. And this year's adopted rate is 4.7% higher than the no new revenue rate. So it is accurate to say that they increased the tax rate, the property tax rate, by 4.7%. It is also accurate to say that the tax rate came down if you qualify that by including an evaluation of the appraisal values, but that just complicates things. Now let me show you where these numbers all come from. And here's the valuation. So let's go to the 2023 year. Now this is the unofficial budget that was approved. I know it hasn't changed, but they may include additional information when it comes out in an official format. So here's that page. Here's the equivalent page, and you can see in 2023. So this is the 2023 budget that was adopted in 2022. And you see that was a 14.8% increase. A lot more new revenue and a lot less was generated by the new property. And you can see, let's go and look at the tax rates. Tax rates. So this is 2023. So you see last year's tax rate was 44219. There it is right there. And again, that 44219 that generates that amount of revenue, 12,259, is equivalent to 12. That's a close. It's not exact, but it's close. And then the rate of 41196. You know, there's always adjustments they make, and I don't know that it's ever an exact match, and it's pretty complex. I have not studied that process. But this rate on that property valuation generates 12,227 million, 12,259 million on much lower at a much higher rate. You can see how those things are roughly equivalent. And we can go year by year, and you can see, they always show the couple years from before. Joe Weber had 3 years with the same exact tax rate. That's what this is. Yeah, see, here's where we get our no new revenue rate. So if you look here, again, these are the 2021 tax rates in the 2022 budget. So if you look at 2021, it's the 2022 budget year, 4588. No new revenue, 4588. And the adopted rate is 464. And then you can see it here is 456 was the no new revenue rate from the year before, and 464. And if I go look at the year before, you'll see it's the same here. There it is, front page. So here's the 20, and they reverse the order of the columns. They're in reverse order now. So 2021, 1920, they're backwards, don't get confused. So 1919, that's for the 2020 year, 425 and 464. And then here's the 2021 budget year, 456 and 464. And so you get the idea. So this is where you can see I'm getting the certified values from here using the general fund, 3416. And this is again 2021, so 3416, 2021. And that's the same on all of these documents. So I've shown you now where these numbers come from, and appropriations come, I'll show you where that is. Adopted revenues, go all the way down to the bottom. Appropriations, there's always about 25189, 25, and this is 2021, 25189,671. So that's where these numbers come from. And again, that represents a 2.9% increase. This, they stayed the same. From the no new revenue rate to the tax rate, this is your increase, and this is your actual increase. Let's go ahead and highlight that. That's the actual tax rate increase every year. If they're telling you this is their tax rate increase, they're telling you the tax rates went down the last 2 years by this amount. When 3.5 to nearly $5 billion, that's a giant increase. This is your actual tax rate increase. This is how you confuse the public by saying you're lowering the tax rate by arbitrarily increasing their property values. And then the appropriations, and we don't really care, but you can look at all this. So here's a chart that shows 2015 to 2024, that's 10 years. Here's the tax rate on this side, and here's the property valuation. So the blue bars are the property valuations. See how quickly they're going up. Now the appropriations, I just wanted this to be on here, but the appropriations are not in the billions, they're in the millions. So I had to increase the appropriations times 100 in order to get them to show up. This is not an appropriations for a little over 22 billion. It's for a little over 20 million in expenses. And if you look at this year, this is not 3.1 billion, it's 31 million. And so that's where those numbers come from. But what I'm really looking at is the adopted tax rate versus the no new revenue tax rate. And so this orange line is the adopted rate. So the adopted rate in the last 10 years has gone up, up, down, up, even. It was the same 2 years in a row. 464. No, it went, 464, and then it went down, and then it went down. And I want to point out that, last year, the overall property tax rate was still higher than it was 10 years ago. That's not taking into account the total property values. And so finally this year, the property rate is lower than this, but the value of the property has nearly doubled in that amount of time. And then here's the no new revenue rate, and it does something very similar. So the difference from here to here, the no new revenue rate to the adopted rate, you can see how it's a massive increase. Okay, they're exactly the same this year. I don't even know how that happens. That's no new revenue rate. That was in 16, 4202 and 4202. That happened twice. I don't even know how that happens. I'd have to think about that a lot more. Okay, so they did not increase the tax rate this year. This year, they increased it by a giant amount. That's 17. 17, it went up by 6.4. Here again, they didn't increase it. Here it went up by 6.4, 6.2. Here's a giant increase, a 9.2% increase, a small increase of 1.8. You see that number here? That's the difference between the no new revenue to the adopted rate. And you notice the adopted rate's the same 3 years in a row. 464, 464, 464. And that's a giant increase, a much smaller increase, and a much smaller increase. And then in 2023, which was Joe Weber's last year, they had that giant increase in appraised values from here to here. And the overall rate came down as it should. But look at the increase from the no new revenue rate. That they increased the taxes 13.1% last year. Everybody who was paying property taxes on a certain value in this year and who had the same property the following year increased their taxes by 13%. And by those standards, this increase this year is small. But it's not accurate to say that the tax rate went down this year. I can prove it right here. Tax rate increased. The overall came down if you want to look at this column. But that's disingenuous because it ignores the increase in value. This takes into account the increase in value. So you can clearly see the tax rates are increasing every single year except for these two, where it remained the same. I want to try and state this one last time as clearly as I can. Here's this no new revenue rate for this year is equivalent to last year's adopted rate. This is this year's adopted rate. So you can say the overall tax rate went down, but you can't say that the overall tax rate went down without qualifying that with the massive increase in the certified roll. This number is equivalent to this number. This number is that number that has been adjusted to reflect the massive increase in property values. That's why it went down 5 points. Okay, so once you equivalate these two rates, then clearly this is an increase over that. Okay, so our tax rate went up this year, even though this number is down. It's only accurate to say that the tax rate went down if you say because the appraisal values went up. And if you're not qualifying this decrease with this increase, then you're misleading the people you're talking to. So if you want to talk about whether or not the tax rates went up or down, you have to compare the no new revenue rate. Again, these two numbers here are an apples to apple comparison. These two numbers are apples and oranges. So these are the numbers you have to use when evaluating the increase. And clearly that increase is 4.7%, which is evidenced by this agenda item here. So don't let anyone confuse you on the tax rates by claiming that our tax rates are extremely low and going down. What I'm concerned about is the difference from year to year, and that's what this represents. I hope the video was not too confusing and that you found it useful. Thank you for your time.